Hi everyone, welcome to a new video. This is Chris de Calle Mercado. Today we will be talking about Berkshire Hathaway and its valuation. We will go directly to it, so if you're interested, keep watching the video. As you may know, well, Berkshire Hathaway is Warren Buffett's company, and this is the index we are going through today. First, we will know what we own if we own Berkshire Hathaway. After that, we will go to the valuation of the company to arrive at an intrinsic value, and we will conclude with a brief conclusion of this valuation. So what do you own if you own Berkshire Hathaway? Well, in words of Warren Buffett himself, if you own Berkshire, you own a wide variety of businesses, some of them entirely and some of them partially. Of course, there are many companies within Berkshire Hathaway, and there are wonderful businesses, there are average businesses, and there are marginal businesses. What you own, you can find it in the latest earnings report that Warren Buffett has released a week ago. So how you should calculate the intrinsic value of Berkshire Hathaway? First, you have to value the investments that the company has made in partially owned businesses. And after that, you have to value the fully owned businesses that Berkshire owns. So, going through the value of investments, here are the prices or the value at market that the partially owned businesses of Berkshire Hathaway had in December 2021. I've adjusted this value at the current market valuation that these companies have. So, for example, we see how Apple has decreased its value at market since December 2021, but there are some other companies like Coca-Cola or maybe Chevron, even American Express that have increased their value at market at today's prices. So as you see, adjusting all these companies and adjusting others, I've reduced the price of these companies equally to the decrease of the SP 500. So we arrive at a value at market today of $330 billion compared with $350 billion in December 2021. This is a 94% of the value that the company had in December. So it has decreased about 5%. After this, we have to add all these stocks, this value of stocks to cash, short-term and cash-like investments that the company has. So it is cash, short-term investments, bonds, equity method investments, and the cash of that the company owns from railroad, utilities, and energy. As you see, I've just changed the stocks portfolio that we've seen before, and I arrive at a valuation of investments of $511 billion. You can compare it to the value of equity in December 2021, and you see why the company usually trades at a little bit above book value. So we have to value now the fully owned businesses that Berkshire Hathaway owns. Here you have a picture of most of them. There are more, but these are like the main companies that Berkshire Hathaway owns. And how should we do this? Well, we have to research in the earnings release of the company to look for the pre-tax earnings of fully valued businesses. At December 2021, it was of $32 billion yearly, but we have to adjust the insurance earnings because it is a bit volatile. So as you see, I adjust the insurance earnings, taking away $6 billion of the pre-tax earnings, but you have to add back the average of insurance earnings during, well, I've chosen the last 10 years average. which is not much different of last year earnings, but you can see here how the insurance earnings has been more or less stable during time. I've chosen the 10 years average because it is lower than the average since 2007, but you could also choose the 5-year average, which is a bit lower. Although you see that in 2017, there is an outlier number in the insurance earnings, which is quite below what the usual earnings are in this business. So we arrive at a total valuation of fully owned businesses, or better said, we arrive to a pre-tax earnings yearly of 31, almost 32 billions per year. And putting it all together, we arrive to at an intrinsic value. Have you seen investments? We have seen it before. And in fully owned businesses, I've multiplied the yearly earnings, pre-tax earnings, times 12, a 12 ratio, which is at 16 times net earnings ratio after tax. Why I apply this 12 times pre-tax earnings? Because I think that the businesses that Berkshire Hathaway owns are better than the average of the SP 500. And the SP 500 has usually been priced at 15 times earnings. So I apply this 16 times earnings after tax, 12 before tax, and adding it to the investments of the company in partially owned businesses, I arrive at a margin of safety of a bit above 21% for Class A and Class B shares. Here you see the number of shares that the company has for every class. So concluding this video, what do you have if you own Berkshire Hathaway? Well, you have a 20% margin of safety, buying outstanding businesses, and of course with an outstanding CEO and an outstanding capital allocation by the company that will continue after both Warren Buffett and Charlie Munger are gone. So I think it is a very reasonable price to buy today Berkshire Hathaway. Of course, none of this is a financial advice, and you should take it just educationally. And currently, I own a participation in Berkshire Hathaway Class B at the time of writing. So this is it. We have seen the valuation of the company, looking at the value of their investments and the value of their fully owned businesses. I will leave you in the description an analysis that Whitney Tilson's did doing the same kind of valuation, and also an estimate of the repurchase price that Warren Buffett is doing lately. So if you like the video, please like and subscribe to don't miss any further video. Thank you very much for watching. See you in the next video.